Okay, good morning, boys. Today I'll introduce you to the double entry system, okay? The double entry system, okay? Now, if you can see from the name itself, double entry. Double means two times. Two times. And then entry, for example, like I enter the data, okay, data entry. So entry means you key in. So as the name suggests, you're going to enter the information two times, okay, double. So double entry system is used to record business transactions. Remember on the first page we said that bookkeeping is recording transaction according to a set of rules, okay? And one of it is the double entry system. When you record the transaction, we are going to observe the double entry system, okay? And which says that two accounts must be involved for every transaction, okay? Every transaction we need to involve two account minimum, okay? You can think of it to this, okay, like you can think of it like this, okay? For example, like when you buy food at the canteen every day, there must be a person who receive and there must be a person who give, okay? So when you buy goods, when you buy your food from the canteen, you give the money, right, to the cashier, and you receive the food in return, okay? So that's a transaction. For a transaction, there must always be a party that is receiving and a party that give, okay? So two account, there will always be one who receive and one who give. So two, same for here. Transaction, there must be two, okay? One is the receiver and one is the giver. So one account will be debit, okay, and one account, this is double entry system. You will need to accustom yourself to the words debit and credit, because we will come across this a lot next time, okay? So two account involved in every transaction. One must be debit, DR is a short form, and one must be credit, okay? You will see CR as the short form. You see CR and DR, okay, debit. Amount debited must equal to the amount credited, okay? Just like you buy food from the canteen, if you buy a $1 nasi katok, of course you give $1 to the cashier and then they will give you in return a $1 worth of nasi katok, okay? So it wouldn't be like, for example, you give $10 and they only give you $1 worth of food, okay? No. So normally so it will be the amount debited equal to the amount credited, okay? You give $1, you receive $1, okay, worth of food, okay? Same for the transaction. You buy $10 of goods, you buy $100 of goods, you will receive $100 of goods, okay? So we are going to record the transaction using the double entry. So to repeat again, each transaction involves two accounts, and in every transaction, one account will receive and the other account will give, okay? So the account that receive, you are going to debit, okay? This is very important. You are going to debit the account that receive, DR, debit, and credit the account that give, CR, okay? So I'll tag right here because this is important, okay? You will debit the account that receive the value, okay, and you will credit CR the account that give out the value, okay? So this is the steps, okay? These are I'll show you step by step, okay? These are all the types of transaction possible of a business, okay? I have already classified according to the categories, okay? We will take a look at this one by one, okay? So first step, you will underline and identify what are the two accounts involved in a transaction, because as you have seen over here, two accounts must be involved in every transaction. So you see here, you have to identify for each of the transaction what are the two accounts involved. And step number two, you have to identify to debit or credit, because we said that already. One account must be debit and one must be credit. Okay, so which one to debit and which one to credit, you have to identify it. Okay, so we are going to debit the account that comes in or receive, and credit the account that goes out or receive give the value. Okay, let's take a look together. So these are the example of transaction. I have already classified according to the categories, so it will be easier for you to see. Okay, so now as you can see, commence, the word commence means start. When you start a business with cash, okay, this can be cash or this can be check. So first step, number one, underline and identify what are the two accounts involved. Okay, so if you see the word commence or start business with the money, okay, can be cash or check, then it will be the capital account involved, because capital means the money bring into the business by the owner. Okay, so when you see start business with cash, capital account. And with check, if you see the word check, we are going to open a bank account. Okay, check bank. Okay, because it's related to the bank, we are going to open up the bank account. Okay, so this is step number one. Underline the keywords and identify the two accounts. Okay, next, you are going to after you have identified these are the two accounts, you have to decide which of these account you are going to debit and which one you are going to credit. So the rule is that you debit the account that receive, credit the account that give. Okay, so we'll just take a look. We always to make it easier, we look at the money. Okay, from the aspect of the money. Okay, the check or the cash. Okay, when you start the business with cash, okay, with bank, okay, with check, meaning the money comes in. Okay, you receive the money in your business in. So this one will be debit. We debit the account that receive. Okay, so the money in. So this one will be bank. Okay, bank. And then we will write SE. SE stands for account. Okay, it's a short form for account. SE stands for account. Okay, now, so one must be debit and one must be credit. So this is debit, and so this one will automatically be on the credit side, capital account. But as we go along, you'll learn that although it's on the credit side, it does not mean it's minus. Okay, it's we'll talk about this next time. Okay, but now you just do it like this. Next, these are the second categories. When you buy goods for resale purpose, okay, normally a business, they buy goods at a certain price and then they sell it higher than the cost in order to make a profit. Okay, so these goods, okay, is for resale purpose. We call it goods. When you see bought or purchase, it means the same thing. Bought or purchase is the same. You bought goods. You see, bought goods. Okay, so it's a purchases account. When you see the word bought goods, it's purchases account. Okay, now there are three types of transaction when you buy the goods. You can either buy the goods and pay by cash. You can either buy the goods and pay by check. Okay, or it can be a credit transaction where you don't pay the money first on credit. Okay, as we learned before. Okay, so these are cash transaction. Okay, meaning money payment is made immediately, and this one owing. Okay, credit, hutang dulu. Okay, you not yet pay the money. So when you see the word cash, you open up the cash account. When you see the word check, you see here check, you open up the bank account. And if you buy from the supplier, there will be a name here, because if you see You buy goods by cash, meaning you pay by cash. You buy goods by check, meaning you pay by the check. And if you see you buy goods from a person name, okay, here that means it's on credit, you not yet pay him the money, okay? So you just use the person name, okay? And this person, he is a trade payables. Trade payables is a credit supplier. So now this one, when you buy something, okay, what we will just always focus on the money, the cash and the bank. When you buy something, the money, okay, the money go out, right? Just like you buy food from the canteen, you give out the money. So when you buy something, the money, this one goes out, okay? Cash. Okay, you have to write account, but I'll just omit it because the space is very small for me to write using this pen. Okay, so the money go out, and this is the bank. Okay, money go out, and this one from XYZ, supplier XYZ give it out to you. Okay, so what will come in is the purchases. Okay, so if we know already the money, this account out, this one automatically it will be on the debit side. So purchase account. Okay, I just omit it because I don't have enough space to write. Purchases and purchases, okay? Account, okay? You just have to write account at the end by yourself, okay? Okay? So far so good? Yes? Okay, now next. On this one, we buy the goods. For this one, number 3, we sell the goods, okay? So you see, so good, so good, so good. So what account? You open up the sales account. If you see the word so good, open up the sales account. You sell for cash. You sell the goods and receive the cash. You sell the goods and receive a check. You sell the goods to Ali, a person name, meaning he not yet pay you the money. Because if he pay you the money, you will have see the money here, cash or check, okay? Now, when you sell the goods, assuming you are a business, when you sell, you receive the money, right? You sell the goods, you receive the money. So money comes in, okay? So cash, you receive the money. Cash, bank, receive, okay? Comes in, okay? And this one you sell to Ali, Ali receive it, okay? So here you just write the other account, sales, okay? That's how you do it. Next, move on more quickly. Okay, number 2, when you bought goods, then you use purchase, okay? But over here, take note, you purchase a non-current asset, okay? A non-current assets can be computer, furniture, okay? All the assets. So for example, you see you bought motor vehicle, it can be furniture here, and so on. When you buy a non-current asset, you use the name of the non-current asset. So for example, motor vehicle, you open up the motor vehicle account over here, okay? Do not see bought and then you write purchase, okay? If you purchase is only for bought goods, okay? When you buy the assets, you are going to write the name over here. Furniture, motor vehicle, computer, office equipment, and so on. So you write the name. But this is from on credit. Because you see the person name, that means it's on credit. And this one you pay by cash. Again, similarly, like number 2, when you buy something, the money go out. Okay, you see cash? And this is the person name. So cash go out. And you buy from Romney give out to you. Okay, and you will receive the motor vehicle, okay? And now this one sell, okay? When you sell, take note, you do not write sales. You have to see you sell the furniture, then you have to write furniture, okay? You sell machinery, you have to write machinery. I repeat, you do not write sales. Sales is only when you sold goods, okay? So you write furniture, just follow whatever is here. You write sold furniture account, Sell to Abu, so Abu, customer. And then for cash, so cash account. You see, when you sell something, just like number 3, when you sell, you receive the money, okay? So you receive the money in, and then you sell to Abu in, okay? So your furniture out. You give out the furniture to Abu in, and you give out the furniture, and you receive the money, cash in, okay? And next, number 6 is almost the same as number 2, buy. Number 4, purchase, okay? The money will go out, okay? So when you buy or pay for goods, purchase. When you buy motor van, okay? Or when you pay for rent, okay? Anything that you buy, you pay, the money go out. So the money, cash go out, and bank out, okay? The money go out. So purchase, the other account will be here in, okay? So you buy motor vehicle comes in, and your money goes out. Now receive money, this is like number 3. When you sell the things, you receive the money. Number 5, you sell, you receive money. So number 7, you receive money by cash. And then you see the word check is bank, okay? So the money, cash, and then the money bank will be received in, okay? So the other account, this one, rent receive, interest receive, we use interest receive account, receive rent, we use rent receive account. So it will be on the opposite side, interest receive, and then this is rent receive, okay? Always think it in terms of the money, cash and bank first. It will be easier for you this way, okay? So you receive money, cash and bank in. When you pay and when you buy, you see, the cash and the bank. When you buy, you see here, buy, purchase, you see, the money go out, okay? When you buy, the money go out, okay? Cash and the bank go out. When you receive, the monies come in, you see, and when you sell, the money come in. And next one, this one number 8, is about drawing. Drawing is a new term. It's when the owner withdraw the goods. It can be he withdraw the goods, or he can withdraw the money from the business for his own use. It's called drawing, okay? When the owner take out something from the business for his own use, it's called drawing. It could be he take out cash for his own use, or he could take out goods for his own use, okay? So if you see the word personal use, take out something for personal use, that means it's a drawing account, okay? Automatically you open up the drawing account. So you see what he take out here? He take out the cash for own use, he take out the goods, so we write purchases for own use, okay? Now withdraw, take out, so take out the cash out, take out the goods, so purchases out, okay? So the other account, you will write drawings, okay? That's how you do it. And lastly, second last, number 9, sales return, another word is called the return inwards, okay? When you sell to customer the goods, and then if they find that it's faulty or it's damaged, they return to you, it's called return inwards. Do I have a space over here? I'll draw a picture for you later on, okay? Okay, maybe I'll draw it over here. Let me erase this one first. Okay, I'll draw the picture for you, so it will be easier for you to see. Okay, so I'm talking about this one, number 9. Okay, number 9, sales return. Okay, now this is you. Okay, you sell the goods to a person. Okay, for example, person A. Okay, you sell on credit to a person, sell goods, so it sells account. And then after that, A realized that the goods you supply to him is damaged, so he returned to you. Okay, return. He returned the damaged goods to you. Okay, so you see, do you see the arrow going into you? Okay, you see the arrow going into you. Okay, so this is sales to him, and he returned. So this one we call it the sales return. Okay, another name for it is called the return inwards. Return inwards. Okay, you see the arrow going into you. Okay, sales and return. Okay, sales return, return inwards. Okay, return inwards to you. Okay, now if you see the name Ali, Ali returned the damaged goods. Okay, so Ali return. Okay, it's a sales return. So Ali going out and return inwards. Okay, you can write here return inwards. Return inwards. Okay, another name, or you can also write sales return. It's up to you, but I think it's better to write sales return. Okay, but in order for you to identify easier, you can see inwards. Okay, so it's on the receive side, debit side. Okay, so sales return by Ali. Ali return, you see, Ali give out, and here sales return. Okay, the last one, let me erase this one first. Okay, oops. Okay, so now we are going to go through the last one, or explain this last one. Okay, now this one, purchase return. Okay, just now you are the seller, you sell the goods. Now you are the buyer. Okay, so this is you. This is you. Okay, you buy the goods. You bought goods. You bought goods from this person. Okay, so this person, this is called a purchase account. From this person can be X or Y or anything. Okay, so this person, the supplier. Okay, if you buy from him on credit, he's the trade payable. Okay, buy goods purchase. Okay, now after you bought the goods, you realize that it's damaged, or is not what you have ordered. You return. Okay, you return the goods to the supplier. You see the arrow going out from you. You see, going out. This is you. The arrow is going out from you. So you return the goods, and this return is called the return outwards. Outwards. Okay, out, going out from you. Or another name is called the purchase return. Okay, or you can call it the purchase return. Okay, I think nowadays people more frequently use the word purchase return instead of return outwards. Okay, so you see, return to supplier. Okay, so return damaged goods to XYZ, so it's purchase. You see, you return to supplier, so it's return, purchase, return, and you return to XYZ. See, you return to XYZ. XYZ will receive the goods in, and your purchase return will be out. Okay, you return out. You see, you purchase over here, you purchase, and you purchase return. Okay, return. So that's how you do it. How to differentiate between number 9 and number 10 is that this one will have a name in front. Ali return, meaning Ali is our customer. Ali returned the damaged goods to us. We are the seller. And this one, return to, meaning we buy. Okay, we buy, and now we return to our supplier. Okay, so return to, you see, to XYZ, meaning XYZ receive it. Okay, and this one, Ali return to us. Ali give out. See, Ali return to us. Okay, sales return, and we return to XYZ, and then we purchase return outwards. Okay, You see, return hours out. Okay. This is a this double entry is a very important. Okay. I think it's the essence of this topic. Okay, so it's very important that you know how to do this. Okay, all of this. Okay, I have already categorized all these according to the categories for you. So if you can at least spend some time to familiarize or have a read at this, it will help you a lot uh coming up lah in doing all the exercise. Okay, this is the basic topic, but this is also one of the most important topic. Okay, to learn. Okay, the double entry, the foundation. Okay, of accounting. Okay, so I hope you can spend some time to read this up. Okay, and then we'll move on with the exercise next lesson. Okay, thank you.